minutes. It's huge, but I do look forward to shedding some light with two very insightful speakers who have joined me. My name is Michelle Meinecke, and I'm the Director of the Energy Transition Dialogues at Gulf Intelligence. Before we delve into the main topic today, I'd like to introduce each of the speakers to give their opinion on the list of stories which should be showing up on the screen very shortly. First up, we have Thomas Engelmann. He is Head of the Energy Transition at KGL Investment Management. Thomas, thank you very much for joining us. Which story is your top pick, please?
My topic would be about the long-term prices on hydrogen, so the cheapest hydrogen pathway.
And why does that grab your attention, apart from the obvious reason that if this doesn't work out, then there is no hydrogen market?
I think it's exactly the point. A lot of people are discussing at the moment. Hydrogen is champagne. It's too expensive. Hydrogen is used the last 50 years about where it used. The problem was it is used based on coal or gas, gray hydrogen. So we cannot compare because we do not see the destruction of the environment in parallel. So these kind of negative costs are not included. So if we ask about the cheapest way of producing hydrogen, we have to go in a long-term directive. And we always say in Europe, the target is green. The colors towards the green environment could be colored, but we cannot only have a discussion about the price by itself. It's for us as financiers very important. But additionally, we have to find governmental subsidies and a regulation body who gives us also survival in terms of we can invest in projects, even if they are not economically viable now without subsidies, but with subsidies, they will be in the best way in the future that hydrogen goes down in prices, and it will go down in prices, definitely.
And then that crutch of subsidies can be subsequently removed in accordance as the prices go low. So do the subsidies. That's something I'd like to touch on again when we get into the main chunk of our conversation today. And so thank you for bringing that up. Yusuf Makun, Managing Partner of Cranmore Partners, thank you for joining us. Great to see you again as well. Which story grabs your eye, please?
I was caught by OQ's focus on green steel and cement projects. Why? Because I find that firstly, despite the challenges in Oman and despite the points that Thomas has touched upon in terms of costs, etc., OQ cracking on as an oil and gas company with green hydrogen is quite insightful and smart, especially starting with the low-hanging heavy industries, as it were. Steel and cement are prime examples in my view. Quite exciting because notwithstanding Oman being in a challenging situation in terms of economics, this focus is helpful, and clearly they have identified the vision of decarbonizing heavy industry as a key, let's say, advantageous point in the short term that, if achieved, could give them an edge.
Indeed, and it does raise a question if you can have a country that is fossil fuel centric with its economy quite heavily, and it's having the economic strife of over the last year, and of course Oman has had economic troubles in the past as well, not just from the pandemic. If a nation like that can be as creative with this sort of move, then it certainly puts a spotlight on other nations with deeper pockets, asking what they can and perhaps should be doing as well. Right, let's crack on with the main topic of the day: hydrogen, how to get the dollars moving. So there are over 30 countries with hydrogen roadmaps at the moment, and around 228 large-scale hydrogen projects announced across the value chain. These are not all green, these are all the colours that we're operating with, and about 85% of these are located in Europe, Asia and Australia. So you'll notice an omission with the Middle East there, which arguably with the region's renewable prices should absolutely be on that list, and if not now, very, very soon. So with all these projects coming to fruition, those investments are going to reach more than 300 billion in spending up to 2030, including 80 billion, which can be considered mature. And this is really important because these projects are in the planning stage. They've passed FID, they're under construction, they're commissioned, or they're operational. So the blueprints have evolved, which is a massive point in this conversation, how to move this hydrogen conversation from theory to reality. And governments have also committed more than 70 billion US dollars and public funding. So against this backdrop, which is rather bullish, Thomas, why do you think some investors are still hesitant when it comes to supporting this market? We've already touched a little bit upon needing more guarantees about the value of subsidies, but what else is making them see hydrogen, especially green hydrogen, as a bit too high risk at the moment?
Let's say it this way, if you look from the renewable side, what we had 15 years back, we have never discussed about the off-taker, because the off-taker was an anonymous market of the power grid. Here, we have not a hydrogen market, a hydrogen grid, so it's a one-to-one situation of the off-taker. So for us, it's very clear a project starts with the off-taker, what is their need. If the off-taker, for example, sits in Europe and the production facility sits in Oman, you have a certain kind of a gap in logistics. That means then for us as an investor, it's not of interest alone that Oman, or let's say the MENA region, has the lowest prices. It is also about what is the risk of the logistics and the storage to come, for example, to the off-takers markets. Here I speak about the United States, I speak about Europe, I speak about Asia, here also Japan, China potentially in the future. So this is a logistics issue. If you combine that now, you see that you add risk over risk. So you have the production, you have the production of renewables. First, if you go on green hydrogen, then you swap it into an electrolysis project, which is a complexity new. The biggest project at the moment is 25 megawatt electrolysis on a standalone project. So if you want to raise up and you have huge of potential of solar and wind capacity, and you have gigawatts on projects, the point is not that the electrolysis is not working. The point is more how is hundreds of these modules, these stacks are interacting with the demand side. So, and this is the part of for us and financiers, the more you add on risk, so to say, on the value chain, and you want to finance the whole value chain, this creates a little bit of a problem. This means for us, we would love to have a situation where we could, let's say, have an off-taker who is clearly involved in the decision-making process of how much hydrogen at which bar pressure they need over a year, because it's a difference if you have a blending, so to say, you're gonna use green hydrogen in a financing project, and you send it to the, let's call it anonymous gas grid. Or if you have a steel plant, Yusuf, you spoke about steel plants. Yeah. Steel plants have to have this kind of a feedstock, green hydrogen, 24/7 for at least 350 days. It's a completely different kind of a project risk relationship. And with this, let's say we need this kind of support functions on subsidies, potentially guarantees of the off-taker, because sometimes we see that also off-takers are not aligned in that kind of a, let's say, supporting function, not only as a payment guarantee, but also of a take or pay guarantee, because for us, as investors, it's very important. We need to take or pay. Pay is produced, guarantees from the off-takers. So off-takers for me is, together with subsidies, one of the major key points where I'm so confident, because in Europe we have a lot of off-takers. We have to transform from fossil fuels to another energy vector. Green hydrogen is the optimum way for a lot of industries, steel, cement, ceramics, but also the transport sector.
But also the infrastructure side in Europe is propelling so fast, 40,000 kilometers worth of existing infrastructure for gas to be hydrogen ready, in the next couple of decades. And that target's nearly doubled from the number of kilometers on last year. The level of ambition is huge, and in turn gives investors more of a stake in the stand, and obviously it's got a lot of government support. It's got the hydrogen strategy as well, and be keen to know from you, Yusuf, just before we go to our first survey questions today, be keen to know from you, what do you think the Middle East can prioritize or needs to prioritize in the next 6 months to a year to also push forward and get that level of confidence that perhaps some players in Europe are already receiving from investors? What do you, obviously the Middle East can't do everything all at the same time. What would you hope they can prioritize in the next 6 months to a year?
I'd go back to fundamentals in line with Thomas was saying. The challenges are significant if you focus on the challenges. The opportunity is also significant, but one of the key things is indeed to be near your off-taker and to simplify as many things as you can. So that's probably the path that Europe is going towards. And let's say corridors are being established between optimum producers and bulk buyers.
Germany and Saudi and Australia going into Asia.
Saudi, but certainly within the EU for sure, and then perhaps Australia into Japan, South Korea, etc. Middle East needs to find its place in that context, and I think as part of that, perhaps focusing on some local demand is also important, and perhaps substituting some feedstock and or some energy locally from fossil or whatever other alternatives into green hydrogen will be important, because the equation of exporting into jurisdictions that have otherwise their own other options will be a challenging one. And that's by definition, for example, you mentioned Saudi into Germany, it's very much that. Would Germany purchase from Spain or would it purchase from Saudi? Maybe both, but certainly.
Well, it's got 90% of its demand needs to come from elsewhere, so I think they're quite hungry. But
yes, they will be under pressure to also purchase perhaps more locally first.
Of course.
Europe-wide. I think the
Middle East has to work harder, really.
Naturally, because geostrategically, it is not very close to a demand center unless if it creates the demand center itself within itself. So it is in competition with quite formidable alternatives today in its targets markets, I guess.
But do you think even before talking about off-takers, do you think that there needs to be roadmaps? Do you think that the countries in the region, and it's hard to talk about the region, it's such the generalizations are rife, and of course every nation is different, and within every nation there are different needs as well. So just excuse my generalities here because they're awful, really. But do you think that really the region needs to establish much firmer roadmaps, and that will also help, like the EU has done with the hydrogen strategy?
Yeah, I'm sure, but yes and no. I think I'm much more of a doer, as it were. I think roadmaps are good, strategies are good, but implementation is where it's at. And
less talk, more action.
Tangible decisions on what various roadmaps mean when it comes to their impact on an actual project. I mean, that's one of the things that Europe is still grappling with. So what is the subsidy channeling vector in Europe for green hydrogen? It's still being defined. There's talk about CFD on CO2 price. There's still talk about, carbon equalization at the borders, but what do they really mean? I think speed will be really important in that regard. And I think it comes down to, in the end, I still feel offtakes and logistics to delivery to offtakes from wherever it's optimal to produce this, and how you can enable that. Then the magic, let's say, gold that you need to sprinkle on top to make this happen by way of a little bit of support, because significant reliance on subsidies will not make this industry sustainable either.
No.
So I think it needs to take shape more organically, and then to further catalyze it, the governments have to be really sensitive to the minimum level of intervention that's required to gain its momentum to mass scale.
So organic development on a localized basis with minimal but essential government support if and when needed, and then we can start talking about an export market.
That's what I would say, yeah.
Okay, excellent. Thank you very much. Right, can we bring up the first survey question, please? I'd be really keen to get your thoughts on this, especially in the context of everything we just discussed. A $200 billion green hydrogen industry will be created in the GCC by 2050. Agree or disagree? This is a recent report that came out that pegs that figure. So just while time is taken and everybody has a chance to vote on that, I want to loop back to something Yusuf just mentioned about the carbon border adjustment mechanisms, and hopefully we find out more about that later this year at COP. Perhaps that political momentum with Europe and maybe even the US and China and a couple of other nations. We'll see collaboration on that. Maybe that's too optimistic, but we will see what happens later this year. But for now, putting a price on a carbon price and then how that integrates into the hydrogen markets in terms of accelerating that market development, that's something I'd really like to discuss, because huge progress is happening with putting a price on carbon. I used to price carbon markets 15 years ago. It was a niche area. It was very much for the fuel switching fundamentals for other markets, and it didn't have the oomph that it increasingly has now. And the voices are getting so much louder, from 2 countries in 1990 that had carbon taxing or a pricing mechanism for carbon, to 64 carbon pricing initiatives implemented today, according to the World Bank, covering around 21% of global greenhouse gas emissions. So obviously there's a long way to go. 21% is still a relatively low number, but considered to where we were, it's a huge jump. But I'd be really keen just to start off with you, Thomas, the how powerful an impact can putting a price on carbon have on hydrogen markets?
Yeah, I think I speak from the European perspective, but I think it's the definition of what is it worth to look for carbon. A carbon price is the missing link of what I told you. Let's call it the magic word ecocide. So is it okay that we make pricing by financiers by not having a huge factor of costs, negative costs for the next generation, not included in our calculations? So the last 200 years, yes, we have done that. It is as it is. But now we came to the point where we said, potentially in the future, we have to attract potential future investors and industries, our off-takers, that they act in a more sustainable way. From the financing perspective, our LP clients, they have a clear message for us. They're saying, I want to impact with my money the next generation society welfare. And secondly, show me that you are with my money in the range of ESG governance bordering conditions. For us and for investing into energy related projects like hydrogen, energy vectors, it's clear that environmental friendly investments are a must. So is a driver for that an ecosystem where we say the price for CO2 has a value, a negative value. And we made some calculations in our financial models for the steel market, Yusuf, what you explained, and it's very clear. If you let the 20 euros and below price on CO2 a ton, it makes just no sense for a from an economical system to change anything in your production facility. But if you get from the society through government a clear focus and a clear pathway in the future, we go up to 100, it go up to 150, and it should not be done by private equity and hedge funds who do that in derivatives markets. It should be done in real, because then all policymakers together with the industry have a clear focus of it gets very expensive if you destroy in the future society's life, means environment related. And
do you see that triggering greater investment in hydrogen? Do you see that Absolutely. As that price hopefully goes to 100, that will be a key trigger for those who may see hydrogen as just a step too far beyond the renewables market? It's green hydrogen.
It's very easy. So at the moment we make a lot of calculations as financiers of business cases, business models, and what we see is we discuss about the price of hydrogen. Okay, but what we do not have in our calculation is what is the cost of our off-taker if he is not changing their system, their production facility.
The equation is broken.
Exactly. So we do not see that, but it is a part of the solution. It's a part of the overall decision-making process. And this is what I just have to say. Also, the off-takers have, if they see a higher price of their input, feedstock whatsoever, they have to calculate in parallel what is the price of CO2 ton costs in the future. And if you see, for example, ThyssenKrupp, who is discussing that now in length about their cost negative effects, and they always say, oh, it's just okay if we're going to invest in green steel. If the others are doing the same, it cannot be that China or India or is producing gray steel. And we from the financial markets, we are saying in 10 years, we will not ask this question anymore, because the Teslas, the BMWs and so on, they cannot swap from the transport sector from a combustion chamber in a battery, and saying, but all the others is more than ever related to CO2. So this means the societies in Europe, but also in other societies in the world, they will transform this kind of new thinking of what is the price related to what you destroy. And this means what we discuss in Europe at the moment, what is the fair situation in order to have equal prices of a green steel or a green product produced at a higher price. And
that's interesting, the word you just used the word destroyed there. You know, how do we price what we destroy? And that very much ties back to the eco side that you mentioned at the beginning, and you know, environmental suicide on you know, which we're surrounded by, on which we live, and obviously all the other species as well, which we're talking about just before we went live. So I think the language itself speaks volumes. Just keeping an eye on the clock, let's bring up the answer to that survey question. Yusuf, I'd be really keen to hear your opinion. 67% agree. That's relatively optimistic. I mean, 2050 is quite a long way away, but $200 billion is a big figure. What do you think of that answer?
I do agree. I mean, of course, there's a degree of optimism there, perhaps, but 200 billion in the scope of the objectives we have isn't that big, especially within a 30-year horizon. 30-year horizon, 200 billion is what, 7 billion a year, something like that. So actually the number could be much higher. Of course, it implies that green hydrogen will be taken seriously. It doesn't, I don't think, I mean, I haven't studied this, but I don't think it implies that there will be a full conversion to net zero in the Middle East by that number. I wish that it could be higher, because really the Middle East should also be net zeroing. For the reasons that Thomas has mentioned, and actually, although one can mention that indeed CO2 pricing is greenwashing and it's a price to pay for continuing to pollute, etc., it's still a beginning, and it's excellent, I feel, because if properly regulated, that is your subsidy.
Indeed.
And then all you need to do is perhaps to take the volatility out for catalyzing early stage investments to bring the cost of capital down for equity investors, but carbon equalizing at borders being done rigorously is a must, for the reason again that Thomas mentions, because otherwise it's a punishment to your local industry as opposed to giving them an edge. So and hopefully that will have the propagating impact. Those who want to sell into Europe will start adopting green production, and that will mean that probably locally they will implement carbon pricing themselves, etc., etc., etc. Hopefully that virtuous cycle should be quite powerful if it becomes reality.
It'll be very clear which side of the line you're going to be on. I think if that is introduced, CBAMs are introduced in the carbon, as you describe, carbon equalizing, there will be a line, and it will become extraordinarily clear which side of it you're on. The fuzziness, although a lot of it is already evaporated, it will be extinguished completely. I'd also just be keen, because you just mentioned there about the Middle East and net zero as well, and the ETC released a report recently saying that in favourable locations where very competitive renewable energy prices can be achieved, like the Middle East and potentially Australia, the cost of green hydrogen is expected to fall to $1 per kg by 2030, making it competitive with grey hydrogen. Now that is a theory, and getting there is something very, very different. And I'm just keen to know, from your perspective, obviously the region hasn't set net zero targets. Some companies have, and there are national visions, and there are government bodies being set up to propel the climate change conversation in the region. So it certainly isn't doing nothing. There is certainly big progress, but net zero still seems elusive. So from your perspective, getting to those sorts of price points to really let the Middle East maximize its potential, do you think that net zero or no net zero plays a massive role in that? Yusuf?
Well, I mean, look, what is pretty clear is that given the LCOE levels for renewable electricity at utility scale, the region has an advantage. Perhaps to access genuine big buying centers, the logistic angle means that it is at a slight disadvantage, and that's why it needs to develop its own demand first and reach mass scale with that. And that is challenging, of course, if you have, for the moment so far, lived primarily on the back of the oil and gas industry. I'm simplifying a bit, of course. It's a big decision. It is not a quick decision. Does net zero matter? I think net zero does matter in terms of an overall target. It's not a binding target really so far. Really, what is the consequence of not achieving it? No one really has.
Reputational.
But reputationally, it's helpful. I think one should, if one were able to, call it, yes. But it's more challenging in the region for the reason I just mentioned.
Of course, of course. We're just going to bring up the second survey question, and the idea behind the IEA's recent net zero report, which I'm sure we're all familiar with. I don't think anybody hasn't seen the main details of that report. Has buoyed investors' confidence in green hydrogen. The IEA saying very, very clearly. I mean, it started saying it very clearly last year, but this report was abundantly clear that the IEA is saying to move away from fossil fuels, 4 trillion worth of investment in clean tech, clean energy tech, and moving away from internal combustion engines and coal power plants, and setting deadlines on this, setting quite ambitious time targets on this as well. So I'm sure we're all very familiar with it. So I'd just be keen to know, is that a yes and no, or is it a wait and see? Please, everybody, do not go straight for wait and see. Commit as much as you can, and if you really aren't sure, then we can go for a wait and see. So at the moment, at least 21% of the world's 2,000 largest public companies have committed to meet net zero targets, which is, of course, that is huge, but there are still regions having to figure things out. As you just mentioned, the Middle East is the historical epicenter of fossil fuels. Its economies, its academia, its industry, everything is very, very focused on these markets. It is certainly a huge ship, and it cannot turn around overnight. So I'd be keen if we could show the answers to that question. It's a shorter voting time, but it's quite a simple one. Okay, very interesting. Wait and see. Okay, we have 45% sitting on the fence for a bit and 55% going for yes. Yusuf, what do you think about this answer? Do you agree?
I can understand. I don't agree, no, because I think it did buoy the confidence in hydrogen, but the obstacles are not so much obstacles of substance, as it were, but more of path and implementation. They are, of course, substance still, but it doesn't question the fundamentals of hydrogen. Of course, logistics is important. Of course, what is the revenue model? How quickly are the cost levels going to come down? When are the capacity building investments going to be made? Some of them are being made, but how large and how quickly, and so on. Those are the real questions. I don't think there is any question about the confidence in green hydrogen from what I observe, at least. And by the way, I think the report from IEA is a brilliant landmark. I mean, this is an institution that 10 years ago could have been accused of being the mouthpiece of the oil and gas industry, not literally, but some would have commented like that. This is not me necessarily, but today it's a radical turn. It's an institution that undershot the potential of development of solar several times year on year, etc. And here they're coming and saying oil and gas investments have to stop if we want to achieve net zero. They have to stop, not tomorrow, they have to stop now. Now, what is the alternative? What are the vectors that have the potential to decarbonize hard to decarbonize parts of the industry beyond electricity, I can't see many beyond green hydrogen today. So wait and see. Of course, given the challenges that Thomas kindly mentioned, to an extent I can understand that. But I don't think that there's any doubt about green hydrogen being the main solution there.
Thank you. Thomas, just before we wrap up, do you have a comment you'd like to make on that survey question or how you voted?
I think for me, and I support Yusuf as well, the high degree and the high percentage of wait and see. My only question is wait and see for what? More thunderstorms? Let's say if the planet is warmed enough, we cannot discuss of wait and see. Then the time zone of reaction is given. We cannot act anymore. We give we give it out of our hands and we're gonna react. The more we're gonna run behind our, things, it's even worse. So we have now the chance to react now in order that we can act really in a green, more sustainable environment. I think from the capital markets, it's very clear investors want to go that way. So we speak very often about distressed assets, and the oil and gas industry speak about Mobil, ExxonMobil, speak about Shell. These are at the moment the highest potential investors in green electricity. So, they are discussing in the M&A markets about not investing in an offshore wind farm, investing in an M&A deal and buying a huge utility. So why should they go this way if they would not clearly see the time of fossil related fuels comes somewhere to an end? And this is exactly what we support as well. So wait and see is no option, unfortunately, and this is clear. So we have to go and start really now. And then we have a pathway to go through. The transformation of whole industries will start. The automotive markets, what we are very strongly related in Germany, but also in Europe, we started already. We know what kind of negative, but also positive consequences it will have. And the other industries, like Yusuf said, hard to abate CO2 industries, they need another energy vector. It's green hydrogen in the future, definitely.
Well, as you said, we need to act while we still have a chance before it happens to us, rather than us trying to change it. As a species, I think we like to think we're in control, and perhaps the realization that this will get to a point and there are no options, and it's very much needs to be a reactive stance from all of us, hasn't quite set in just yet. So the clock is certainly ticking. Thomas, thank you very much. Yusuf, thank you as well for joining us, and I hope to see you both again very soon.
Thank you so much, Michelle. Thank you, Yusuf.
Thank you. Thank you. Thanks, Yusuf.